Hey everyone, welcome to The Explainer. Today, we are unpacking AngioDynamics' latest fourth quarter and full year 2026 earnings report. And let me tell you, it reveals a genuinely fascinating turnaround story. If you love seeing how a legacy business strategically transforms itself into a high-growth powerhouse, you are going to want to see this breakdown. Okay, let's dive right into this. Here's our roadmap for today. First, we'll look at a year of record growth. Then unpack the med tech engine, meet the star performers, explore how they're expanding the market, and finally trace the road to 2027. So, kicking things off with Section 1, a year of record growth. Boom! $320.2 million. That's the top line net sales number, and it is a beauty. We're talking a 9.4% year-over-year growth for the entire company. Talk about capping off an absolute banner fiscal year 2026 for AngioDynamics. And this brilliantly illustrates the journey to get there. Look at this consistent, multi-year climb in pro forma net sales. You can literally trace the steady step up year after year, right up to this record-breaking peak. But here's what really makes this climb so impressive: the underlying financial health. They ended the fiscal year with zero debt, none, and a very solid $53.9 million in cash. Essentially, they're completely funding their own growth. All right, let's move on to Section 2, the MedTech engine, and look at exactly what is driving all this momentum. To truly understand AngioDynamics right now, you really have to look at the business through an engine and chassis analogy. There is just this stark, massive contrast between the two halves of the company. Think of the traditional med device segment as the chassis. It's reliable, growing at a very modest, steady 2.5% for the year, with a gross margin of 46.7%. But then you've got the engine. That's the med tech division. We're talking explosive 18.4% year-over-year growth with a whopping 63.6% gross margin. This is the high-octane fuel that is entirely rewriting the company's financial profile. And because that engine is running so hot, it's completely shifting the center of gravity for the business. For fiscal year 2026, MedTech has grown to represent nearly half, 47% to be exact, of the company's entire revenue mix. I mean, this is undeniable proof that their strategic pivot toward high-margin innovative tech is just working brilliantly. Which brings us to Section 3, meet the star performers. Let's zoom in on the specific technologies making up this powerful engine, starting with our first star, Regen. To put it simply, this is a highly advanced laser system used by physicians to clear out dangerous blockages in blood vessels. Now just look at the sheer consistency here. Orion just hit its 20th straight quarter of double-digit growth. Let that sink in. That is 5 solid years of relentless execution. It delivered 17.7% year-over-year growth for the full year, pulling in $66.9 million in total sales. And this momentum is really being driven by a strategic shift toward hospital atherectomy, along with some great early international adoption. Moving on to our next star, we have AlphaVac. This is their mechanical thrombectomy system, which is essentially a highly sophisticated device designed to safely and effectively vacuum out dangerous blood clots from the body. I want to pause on this number for just a second because, wow, it is spectacular. AlphaVac generated a massive 44.1% year-over-year sales growth. It was the absolute standout performer in their mechanical thrombectomy portfolio for the year, proving without a doubt that there is incredible market demand for this specific solution. Finally, we have NanoKnife. Now, this uses something called irreversible electroporation. Sounds like a mouthful, right? But basically, it's a non-thermal ablation technology. Instead of heat, it uses rapid electrical pulses to destroy targeted cellular tissue, and it's seeing some major adoption right now in the treatment of prostate cancer. While that 35.2% total growth is fantastic, what's really interesting about this slide is the breakdown. Capital placements surged 61.8%. So why does that matter? Well, in medtech, placing a capital system like the NanoKnife generator into a hospital guarantees future recurring revenue from the disposable probes that are used in every single procedure. It's the classic razor and blade business model. And we are already seeing that strategy pay off big time, with Q4 disposables specifically jumping an incredible 47%. Okay, let's shift gears to Section 4, expanding the market. We've seen the current product success, but now let's look at the pipeline securing the future. What we have here is essentially an organized map of AngioDynamics' future. They're taking those star platforms we just talked about and pushing them into new clinical trials to expand what they can legally and medically be used for.
For instance, the RECOVER-AV trial is evaluating AlphaVac for acute pulmonary embolisms. The RELIEF study is taking NanoKnife and evaluating it for benign prostatic hyperplasia, or BPH. They're systematically taking dense, complex clinical trials and translating them into practical, highly lucrative market expansion.
And here is why this matters. What you should really take away from all those clinical initiatives is the ultimate financial impact. By proving their tech works in these new disease states, AngioDynamics is aggressively opening the door to a staggering $10.9 billion total addressable market in the U.S. for the years between fiscal 2027 and 2031. They aren't just fighting for market share anymore. They are drastically expanding the size of the pie they can eat from.
Which leads us perfectly into our final section, Section 5, the road to 2027.
Let's zoom out one last time to see what investors can expect in the coming year. Looking ahead to fiscal 2027, the strategic contrast of the company's two halves really crystallizes here. Management explicitly expects the traditional med device segment to be completely flat, zero growth. But they project the medtech engine will just keep on surging, growing an additional 12 to 15%. And because of this mix shift toward those higher margin medtech products, they expect overall gross margins to expand to between 54 and 55%, driving an adjusted EBITDA of $13 to $16 million. So we've seen the record growth, the explosive margins, the STAR platforms gaining incredible traction, and a pipeline unlocking a nearly $11 billion market. I'll leave you with this final thought to ponder. With the medtech engine firing on absolutely all cylinders and continuing to take over the revenue mix, is AngioDynamics building the ultimate medtech powerhouse? It is a fascinating question and one we'll for sure be watching closely in the quarters to come. Thank you so much for joining me for this explainer. Keep learning, keep analyzing, and I'll catch you on the next one.